Hello, I'm Juliette Sarli. In this week's edition of IG Macro Intelligence, we take a deep dive into UBS Equity's strategy and outlook at the UBS Investor Conference in Sydney. UBS analysts say the likelihood the RBA is at or towards the end of its easing cycle is not a reason to get overly bearish on the Australian equity outlook. Equity strategist Richard Shellback has highlighted a market melt-up scenario of the past 18 months where equity prices continued to rise despite high valuations and moderate economic growth. He's optimistic that equity markets can continue to perform in 2026, telling AusBiz on the sidelines of the 2025 UBS Investor Conference in Sydney that artificial intelligence is the key thematic driving global markets at present, similar to the late 1990s dot-com boom.
I see the Aussie equity market continue to move higher over the next 12 months. We think the economic growth story of about 2% GDP growth for Australia is a nice backdrop to have. Earnings growth through the equity market is improving now, particularly led by the mining stocks. And therefore, as the broader equity market sees possibly a transition out of some of the stocks that had been doing the heavy lifting across to some of the laggards, it means that for 2026, equities should enjoy relatively strong gains again.
Shellback sees data centres and the broader technology sector as the main beneficiaries of the AI-fueled boom. And when it comes to the age-old question of the banks versus miners, he's more constructive on the material sector with a specific interest in Newmont.
Miners are where we are getting our investments. There's a few channels there. Firstly, the banks suffer from such stretched valuations, and with the earnings growth environment for those looking to moderate, those valuations really come into focus. What the miners have is the fact that this commodity cycle looks quite interesting. Chinese growth's not particularly strong, but commodity prices seem to be high and relatively stable. And therefore, when you look at the relative valuations between those sectors, miners stand out. The third point that really allows miners to become more competitive is the US dollar cycle. The US dollar over the next 3, 5, 8 years is likely to continue depreciating. That historically has been very supportive of commodity prices and has led to outperformance from the miners.
Well, Newmont's Australian-listed shares are up almost 95% over the past 12 months, rising sharply thanks to the continued upside in gold prices. Analysts are bullish on the stock, rising even more, with the average target price of $148.48, according to Refinitiv, which suggests a 14% upside from current levels. ASX TradeWatch data show the technical picture for Newmont is mixed, both the 20 and 200-day moving averages trending higher, which is another bullish sign for the stock. Meanwhile, UBS is underweight the financial sector, but has a preference for Westpac due to its relative value and earnings quality. Overall, analysts surveyed by Refinitiv are fairly negative on the stock, with the average target price of $34.06 suggesting a near 14% drop from current levels, and the average broker recommendation a sell. Well, when it comes to energy, UBS is cautious on oil prices in the near term. Energy analyst Tom Allen saying the macroeconomic picture has been challenging for the oil market in 2025.
A little bit cautious on oil prices near term, but I would counter that by saying one of the things that the market has underestimated is the impact of sanctions on some of the large Russian oil producers. And I think over the course of the year also, we've seen the Chinese buying a lot of oil for their strategic reserve. And I think those two factors have been really what's held up the oil market. On fundamentals, we would have expected oil to retreat a little bit further south than where it is, but it seems to be planted for now in that $60 to $65 a barrel range. And we would expect that it stays around that range into the US midterms.
Allen's preferred pick in the energy sector is Santos, which has fallen around 3% over the past 12 months. Shares appear to be in a long-term bearish trend, meaning investors see little opportunity in owning the stock at present. But analysts like UBS's Allen see upside, with the average broker's target price of $47.56, suggesting it can rally another 18%.
Still think that Santos is right on the cusp of a step change in production and cash flow. that will put Santos on a greater than 10% free cash flow yield in 12 months from now. They're about to, in the coming weeks, we hope, release their first LNG cargo out of the Barossa gas project in Northern Australia. And their big brand new oil project on the North Slope in Alaska called Pikka is also progressing really well. These two projects have been well known and understood, but again, we come back to fundamentals. I think the case is really compelling to add Santos here.
And that is your IG Macro Intelligence for this week. We'll see you next week.